Welcome, and the jobs data was positive, but it was, far as I can see, it was US earnings in certain companies that kept the market positive, and also a wave structure positive as well. So with the US 30 here, the DJ, we're looking for, in terms of the trading levels, the 5,500 across here. We're looking for the first high above the level here to complete. In Elliott terms, it is normally the third wave at a level, the fourth wave back, and then the fifth wave up here. And we're looking for 5 waves up through here. And currently we've got the top of the third wave, so we're looking for the fourth wave and the fifth wave to come in through here. And then we'll see a larger ABC pattern across here. So that would take us into Friday and Monday as such. So in a bit of a nutshell, it's always clear on the cash market, but because we trade this, we've got to look at this. So we've got basically up for 1 here and back for 2, and the third wave up and the fourth wave coming back, and the fifth wave coming up through here. So maybe just the Friday really. The it's probably a little bit sort of spooky, but the full moon's on the next Tuesday, so Monday, Tuesday can be a turning point for markets, new moons and full moons. The financial system is based on the on the solstice and so forth, so it sort of fits in there. The accounting system fits in there, so it's always good just to keep a bit of an eye on that. We'll see anyway. The US 30 here as well. We're looking at this as being a wave 4 coming back through here. So look, any test lower, I mean, if it tests lower here, then find support on top of the 30, you'd go long from there. If it sits here and finds support on the 50, then you go long from that point. So it's that simple. The S&P 500, the 1700 up here is a reasonable target point that we're looking for here, and we're also looking for a 5-wave structure up through here. So let's have a look at that. Okay, on the 1 hour chart here, we're looking at 5 waves moving up from here, the 1, the 2, the 3 and the 4 and the 5 moving up through here. This is moving down a bit and overlapping this here, but the cash market is still above this old high here as such. And as we've been looking at this yesterday, we were looking at this little ABC here, and then we're looking for wave 1 up, and we're looking for wave 2 to come back. But the futures so forth have moved to this point here, but the cash has held well. So we're still considering this to be the third wave up, and even though this has got overlapping wave structures with wave 1 here, we'll still consider it wave 4 on the cash market, even though it can come down further. And we'll be looking for another move up through here. So obviously something's happening in the after hour trade there. The European markets as well are positive as well. We've got the DAX here, and it's at 8,300 here. So this is the top of minor group 1. So it is important, but at the same time we're looking for 5-wave structure up through here as well, and we've only got up for the top of the third here as well, the 1, the 2, the 3, the 4 and the 5 to get up through here as well. So this is the third wave up. So if I just come back here a little bit, we were looking, remember we're looking at this triangle through here with the wave 4 down for wave 5 here, and then we're looking for wave 1 up to this point here. So we've got wave 1 into here, wave 2, nice strong third wave here, the fourth, and then the 1, 2, 3, 4 and 5 to here. That spike yesterday was from the central bank in UK, not supporting the QE support. So anyway, that's wave 2 here, and we've got wave 3 up through here in terms of the 1, the 2, the 3, the 4 and the 5 here. So we've got a wave 4 coming into the 8,300 here, so it could drop a bit lower than that. But the main point is once that's completed here in some type of correction here, we should see one more push up into this area up through here into 5 waves. So going long off the 83.30 is the first, is the the sort of textbook standard, I guess, with the levels, but of course you can enter in early. But with wave 4s, make sure that they're more matured than wave 2. So, you know, because wave 4s can have triangles and double zigzags in them. So normally they're sideways and complicated, so that should trade out in this range here, with the 83 as the balance line, group 2 as support, group 1 as resistance. So just don't get caught up in this too early. Allow wave 4s to really, you know, really mature before moving into them. The FTSE as well is pretty much on track. As I mentioned yesterday, we were looking for a little A, B and C in here, and then the push up from here, and we're looking for 5 waves up through there. So currently we're close to the top of the third here, so the 1, 2, 3, 4, 5, and then we'll see a ABC correction back into there. And this is where we are. As yesterday, we were looking for this move back into here's wave C, then the up for the 1, the back for the 2 that we're looking for here, and we're looking at going long above the, well, in group 2 here, the 65, 65, 65, 65, 72, and adding on the 65, 80 through here. So look, this is just the third wave here. There's still a fourth wave unfolding here, and then a move up from that point there. I don't know if I got one here right. So the 1, the 2, the third wave up here. So look, next time the 66.30 becomes the retested support, then you can move up from that point there, and the wave 5 that moves up through here should move in the same, it's about the same distance as this here, and that can be, you know, up into this area, 67, but it's probably safer just to trade to that number there. The Australian market is well, you know, it's at 5,000, and it's not doing much. But in an odd way, it's because it's actually sticking to the 5,000. You know, it's really grabbing hold of it. It's actually a positive aspect, really, because it's turning over a lot of volume at that level there, which becomes a really nice support later on in the game, you know, because once it's done and dusted here, it will make new highs up through here, but it will also come back and test this as well. So it is really the in working with the 5,000 here, as I've probably already mentioned anyway, the group 1 here is the resistance, but if the top of group 1, the 30, becomes the, you know, the support, then you can trade long from that point. And that's what we expect. And even though all those markets in the last couple of minutes have just fallen out of bed somewhat here, I'm not too concerned about that, because the structure here in all of these markets is still up for the third wave, and I consider these a fourth wave back. So we're still up for 1 here, back for 2 here, and up for 1 here and back for 2 here. So this third, fourth, there's more to play out here. So there is a positive element, sentiment in the markets, and also within the wave count as well. But that said, the group 2 here is the support. This is the resistance, and this is the balance line. And as I mentioned, while this is going on here, even though we expect it to, you know, edge higher, you know, it's in a choppy environment and so forth. The swings, when a market arrives at you know, at a level, you know, it's got the arrival, the reaction, the first high above the level, and then a thing. But basically, what can happen here are just larger swings. So we get this 5 waves up here, wherever it's going to end, and that's going to come back and test here. So you end up getting this sort of, you know, this sort of swing sort of thing happening through here like this. I'm just exaggerating it, but it just sort of, you know, outlines what sort of happens. It just gets larger, so just be mindful of that. But you know, the US, when I look at the cash market on the US market, it is positive, and it should have a positive next session as well, unless anything comes out of left field. So that kind of leaves the Australian market and the English market positive for Friday, and a positive bias for Monday as well. But we are looking for, you know, a short-term top, so we need to be diligent and protect ourselves at that point there as well. BHP didn't move a lot last night, and this is CBA here. I've just been sort of counting this up a bit here, but I know that the 72 it's going to have problems. So yeah, just if you're trading the SPY, you need to be mindful of this. Of the resistance coming in here, and you can see it too. It was really strong here, and now it's sort of creeping. So it's don't depend too much on the finance sector to push the market up, and the resources, which we'll look at next, don't really have a lot of upside potential. Let's have a look. One market that does have potential for the upside is the oil, and that's why we've been after Santos a bit. The wave structure from here is turning obviously is positive. So one of the main points here was the 106.50, this line through here, and being long above that, and this is pretty much the count for the upside here. So this would be a little wave 4 that's occurring at the 108 here. So yeah, just allow that to play out, and we should find support and then take that up there further. And obviously, well, not all the time, 80-90% that oil will follow stock, and we see that stock has got another push to the upside as well, so that can take that up. But this 110 here is really quite important too, because in the bigger picture it would change the wave count from a large triangle to a very strong third wave moving to the upside. So that's going to be interesting. But at the same time too, that 110 is the first minor level above the major level here. So one being the strongest number, we can expect some type of corrective pattern across here. So just be a bit diligent about how you handle that. But once it's finished and we've got a nice little ABC across here, and then we've got support there, well, then it opens the door up to 120 at that stage. So that's pretty exciting news as well. That would create a longer term trade. So it will take a while to work through all this as well. So but in the meantime, just work within your degree of structure and trade within that. So a further upside there. The copper market, it's just the daily chart here, but we can talk about this while we're here. We've got this bounce off the trading level 3 here, the major level through here, and the interesting thing here is that it does have overlapping wave structures here. This structure here overlaps the top of this first bounce here, so I know that it's corrective. How it will develop is always a bit of an iffy situation, and it is still really quite strong at this stage too, because the reason, well, not the reason for that, but the way I understand that is because these are creating new highs here each time as well. If this high here was lower than this one here, it was down here somewhere, then I know that that it's in a bearish mode, so to speak, and we can, like, this low here is higher than this one, lower than this one here. So I know that it's like a ball bouncing. The first bounce comes down. Let's draw that out there. The first bounce comes down, bounces back up, then down to here, then down to here, then down to here, and then it's going to just roll over at that point there because each one's low there, but we don't have that here yet. We think that it's building at the moment, but it's not there yet. So from that current high there, we're considering this an impulse wave down in line with gold as such, and we're looking for basically a bounce off the 310 here. Once this bounce is a bit more developed, because at this stage it is in 3 waves. We've got this little A, B and C here, but the C wave was kind of sharp, so it's kind of like normally the A wave is sharp and the C wave is more lazy, so it still has potential to the upside here. So we're just going to allow this to develop, and as that develops higher through here, that will obviously lift the BHPs of the world up a little bit higher as well. So we can look for longs there, but we just need to be mindful that we don't fully understand this particular structure yet, and the supply will be back in at 315 here. But support on 13 is also important as well, because when you break down to the next levels, the 310 here, the 320 here, so when you're breaking down into here, then you've got the 1, 2, 3, 5 and 8, the Fibonacci sequence there in terms of ratio. So support on top of the 3 here, on top of group 1, would see the price at the 15 there. So there is, even though it's corrective, support on the 13 here would be very helpful to BHP. Well, BHP's got oil as well, and oil's up, so there's other influences there, but you know, the direct base metals or resources, copper markets as such. The gold market, we're still looking at this as being a wave 4 here, and possibly the high being in place right here. Don't really have confirmation on that just yet, but this is the way that we're looking at it. We've seen this, you know, in this move up through here. This is really the first move that we've seen. You know, we'd expect, you know, this is sold off sharp here. It's tested high here and we're counting it as wave 5, and it's been sold off here. So what we're trying to work out here is we're trying to work out that from this low here, we're trying to work out an A and a B and a C correction, pulling back to the 61.8% mark. If that's the case, then we'll be looking at you know, a move lower through here, and we'll also need to see a little, well, an impulse wave down would be helpful, and then another 3 back up as such would be there, and then down again as such. Now, this little move up through here in 3 waves, that's fine, but that could also turn into 5 there as well. So the top of that wave A there, we need that to be broken on the move coming down through here to confirm it. With me. So gold has rallied more than silver, so it is leading the way. So we could use this as the leader, but silver would probably fall quicker. Just looking into that now. So we were looking at this yesterday like this, and we'd be looking, well, the textbook is the, you know, the 50-60% relationship of previous wave, and that comes in where it is now. So, and you know, this can be counted as the ABC correction from here. So that would be the A wave to here, the B wave to here as such, and then the 5 waves for the C wave up through here. But this looks a little bit corrective in here, so I'm not just, and then once again this would have to come down through, whoops-a-daisy, it would have to come down through this level here to confirm it, really, to confirm that is an ABC, because then we've got overlapping wave structures at that point, and it's a fair way off from that high to this low here at the moment. Looking at this here, this is obviously we're working in group 2 here, which is the 65, the 72 and the 80. But look, there's a lot of other numbers around here that are important as well. So 5 is one of them here. But just looking at this pattern in here, it does appear to be in a sort of this does appear to be a corrective pattern here, right? So if I was trading this here and I seen this here, then I'd just be waiting. I'd find the balance point, which is the 1285, and I'd be looking for some type of retesting support on here, and then looking for a long trade from that point there. The 88's the second number in here. That's the profit-taking number, as you can see here, and of course the 90 here as well. But you know, next session support on that, you would have to, you know, be on the long side. The other thing too, the size of this corrective pattern here is the foundation for the next trend. So normally the distance across here will give you the distance up here. So the bigger and uglier a correction is, then the safer the next trend is, because it's the accumulation through here, and then it will distribute itself out through here. So you know, corrections are the things that take your money, so they're the things that need to be understood. But more than that, you know, the corrections are where the next trend is engineered from. So the more that you understand the correction, the better trader that you're going to be. And you know, the concept of trends and corrections is that, you know, once you've had a correction, then you get a trend, and then you get a correction, then you get a trend. So new traders are just looking for trends all the time, but what they don't realize is that after a trend you get a correction. So you've got to kind of think differently, opposite. You're always getting the opposite of what you think. Right, just have a quick look at silver while we're here. We can see that the move down here for silver hasn't really produced a strong rally to the upside. In fact, it's very weak, isn't it? So these lines here just come from these old lines here. Trend lines are like that. They, you know, out in the future they'll always play a part in. It's just a part of the geometry of it all. But you can just see that, you know, silver is much weaker than gold, so it would be the one to look to short in. But it would be nice to see some sort of rally, but it's trapped in at the midpoint here so far. So just give it a bit of time to bounce. If the 1920 here becomes the retested resistance, the group 1 zone here, well, then you'll know that it'll be moving down from that point there as well. So just give it, just see if gold finds support, and see how this goes. But as I mentioned before, this is the one to look to the short side. Right, let's have a look at FX. Okay, this is really quite sort of simple, I guess, in terms of the US dollar here. The 83 here, which is the top of group 1, if you know, we were looking for 82 as the 82.50 as the 61.8 retracement level or thereabouts. So you know, if this 83 now becomes the support, then we've got half a silly chance that that's going to move up higher from here. But that also means support on here. It means shorting the euro. It means, you know, the other crosses as well will come into play as well. So that's something that we're seriously looking at the moment. So it's something that you could easily see as well, you know, in your own way. So it takes time for things to develop. Of course, if it breaks down, you know, say 50% of that move here down, you know, past that, then it's weak at that stage. But you have to expect some type of, you know, squiggling and wiggling going on here until support is actually developed. And that's a nice support here. It's come down and sat on there, and then we'd want to take that high out here to trade long from that point. But we knew that this one here was corrective and would eventually move down. But this time around, if it finds support up there, then, you know, a move up, and, you know, it'll squiggle around for a while, but eventually if it can develop that support, then that would be the long trade here, but also the short trade for the euro as well, and of course affecting other pairs as well. So with the euro here, we were looking at got the smaller chart here, just okay. So, you know, we understood this was the A wave, we're looking for the B wave, and then we're looking for 5 waves for the C wave. And we got 5 waves in here, so we're sort of, you know, we're pegging that in there as the wave C, wave 5 of C of wave 2 here as such. But we're also mindful that we're still above the 130, and the move down through here, I do have to say, hasn't really given us a nice clean impulse structure, has it? You know, not like a 1, 2, 3, 4, 5. It hasn't been like that. It's been, the first bit was fine, but this is really lagging here. So it's like we've got an A and a B and a C wave here, and then we're developing support here on the 131 here, you know. So that does present a you know, a bullish factor here. So that can still see us, you know, because we haven't really gone above this high here yet, where we realistically we should. So I'm just mindful of that there is, you know, whoopsie-daisy, there's further upside potential here for this here. So we may end up just seeing this all here as wave 1 and ABC for wave 2 here, and then moving up through here. So as you know, I'm always reluctant to short you know, below, well, in this case, below the 130, because that's the, you know, the closest largest number, and being above here, the market's supported. Then the next level down is the 131 here, and we could see it flirting with the this price point here, and you know, this move down through here does give us a reasonable ABC correction, and now looking for support here. So you know, that's that needs to be taken on board there as well. So in that support here at the 131 on the 3-minute chart here, it does appear that this here would be the wave 1, the wave 2, and the wave 3 to here. Okay, so this is obviously the wave 4 to here, but this can just be the A wave. This looks like a B wave, and if this makes another little low down here, then we've got a C wave, haven't we? Because we've got 1, 2, 3, 4, and 5 to this point here. So if that really just sort of, it can break down here, but if it does break lower from here, that's good. If it finds support this time around, then we'll be looking for your 5 waves to the upside. And if we've got the 5 waves here, the 1, the 2, the 3, the wave 4 being sideways and complicated, but a nice base here as well. The accumulation factor, the distance across here should equal the distance up through here. So that's what we'll be looking for at that point there. But also what I wanted to point out too is that if we do get this 5 wave structure here, then you know, 5 waves here as such, like this, would give us an A and a B and a C wave back to here somewhere, or maybe not there, and then another move to the upside. So even if we get that little 5 waves here to come up to this point here, then we'll be coming back here as well, some type of correction in there before we see further upside. So just bear that in mind. There's no sort of short there. You know, the short trade could be taken, you know, under the 72 here as such here, if that was going to be the case. So you know, this is more of a positive bias here for the upside. So, and also keep an eye on that 83 on the dollar as well. The Australian dollar. Okay, so we were looking for a little 5 wave structure up through here to call a high in here, and it, you know, it has moved down here quite nicely. We also need to be mindful as well that that a couple of things can be occurring here. Really, is that this move down through here, we're looking for this in 5 waves. If that's the case here, then we're going to see a 3 wave retracement here, and then we're going to see another 5 down through here. That's the go for that side of it there. Otherwise, if we just get 3 waves down here, then we'll be looking for the B wave to be in place here. So let's just sort of drill in here a little bit through here, and the market has moved down through here and as such. So we had that nice reasonable 5 wave structure through here, and then we've got the A, the B, and the C here for wave 2. Then we've got 5 waves down for wave 3 here, which is the 1, the 2, 5 waves in here, the 3, 4, and 5 here. Now this appears to be in 5 waves here, so well, what we can do is we could call this the A wave to here. This is in 3 waves to here for the B wave, and then we'd be looking for 5 waves for the C wave to come into play here. Once that's completed, then if we're going to get 5 waves, then we'll be looking at it like this through here. So that would be the 3, 4, and 5 here. So that's one way to look at it. That B wave that I was mentioning as well, that would be a 3 wave price action, and that would be, instead of labeling this wave 1 here, we would label that as an A wave, a B wave, and 5 waves down for wave C here, and the B wave would be here. And this 5 wave structure up here would be labeled wave 1, and this ABC here is wave 2 because it never took the low out here. And then this could be a positive move to the upside here. So this could go up here further. So it's a little bit, there's a bit of risk here. The risk is that this C wave that we're chasing here can just roll over from that point. Otherwise, we'll just see this continue to move up through here. So you need to, if you're going to take this trade, then you need to. I mean, if I see this here sitting above the 91.665 here into Group 2 here, that's a very nice support there now, isn't it? So you would go long from that point. You would get a small position here, and then if the 72 became support, which it probably will, then you'd glean another position here and another position here. If it's going to be wave C or 4, then you would trade to the 190 area and basically get out. From here, we've got one. So you see, the thing is that, you know, the reason it can be more positive to the upside is we've got a really nice 5-wave structure here. So this can be wave 1, an A and a B and a C for wave 2 here, and then up for 1 and back for 2 here, and then we're getting this nice, this is 1, 2, 3, 4 here, and the 5 up through here. So we are seeing, you know, this can certainly be a positive structure within here. So yeah, look, being long off this well, because of the close of session, it's probably not such a good idea, but the next session on the 72 there is support, but just realize that it can roll over from this point here, and so keep an eye on the US dollar as well. If the euro pushes up, well, then this will go with it, and keep an eye on the US dollar at 83 as well. Of course, if we get support on the 92, well, then, you know, it's up from that point there as well. Alrighty, well, that's it. So good morning, good luck, and enjoy the weekend.